757%. That's how fast Dell's AI server revenue grew in a single quarter, and it's not even the biggest number today. This is the financial brief. Most people looked at today's inflation report and breathed a sigh of relief. The numbers came in right on target. That's exactly why they missed the real story. The Commerce Department released the Fed's preferred inflation gauge this morning, the Personal Consumption Expenditures Index, and headline PCE rose 0.4% for April, putting the 12-month rate at 3.8%. That's the highest annual reading since May 2023. Core prices, stripping out food and energy, came in at 3.3% year over year. Now, the monthly numbers were actually softer than feared. Core rose just 0.2% versus expectations of 0.3%. And here's where most analysts stopped reading. They shouldn't have. Buried in the same release was a savings rate that fell to its lowest level since 2022. Americans aren't just spending more because prices are higher. They're saving less because paychecks can't keep up. What traders call the consumer squeeze effect is accelerating. Wages are growing, but inflation is growing faster, and the gap is widening. For the Federal Reserve, this creates a trap. Cutting rates would pour fuel on inflation. Holding rates keeps crushing borrowers. You're probably thinking, when does the Fed finally move? Not anytime soon. This data keeps them frozen through summer, at minimum. And that means mortgage rates, car loans, and credit card debt stay expensive for millions of households. But here's what makes today's picture even more complicated. Turning to Wall Street, where the AI trade just had one of its most explosive sessions in years. Dell reported its fastest revenue growth since returning to public markets in 2018. Revenue surged nearly 88% year over year. The stock jumped 31% in extended trading. But the number that actually matters is this one. AI server revenue alone hit $16.1 billion, up 757% from a year ago. Dell raised its full-year AI revenue forecast from $50 billion to $60 billion, implying 144% growth. Think about it this way. Dell was a sleepy legacy hardware company 18 months ago. Now it's assembling the physical backbone of the entire AI revolution, packing servers with NVIDIA's graphics processors and shipping them to more than 5,000 AI customers, from sovereign governments to enterprise giants. And the momentum didn't stop at Dell. Snowflake erupted 36% in its best single-day performance ever, dragging ServiceNow, Oracle, and Palantir higher with it. The AI software rally is broadening beyond chips into infrastructure and enterprise platforms. Most people still think of AI as a chatbot story. Actually, the real money is being made in the plumbing layer, the servers, the data platforms, the cloud architecture. For investors sitting in broad index funds, this matters because AI names are now driving an outsized share of total market returns. Except, not every AI story today was about earnings. Meanwhile, in the Strait of Hormuz, the situation just escalated again. Iran's armed forces fired missiles at unidentified targets late Thursday local time, according to the state media outlet Fars. This came hours after the Pentagon confirmed Iran had launched a ballistic missile toward Kuwait and deployed attack drones in and around the strait. Up to 13 million barrels a day have been removed from global markets since the blockade began 3 months ago. That's not a rounding error. That's roughly 13% of global supply. Chevron's CEO warned publicly that oil prices will jump over the summer as strategic reserves dwindle. Here's the thing. Diplomatic talks are actually progressing. A White House official confirmed the US and Iran have mostly agreed to a 60-day memorandum of understanding that would extend the ceasefire and open nuclear negotiations. But according to early reports that have yet to be fully confirmed, Trump has not yet signed off on the deal. Treasury officials have indicated the team's continued discussions, though no final timeline for completion has been announced. Trump has said he feels no pressure to finalize the agreement before the November general election. And that's the problem. Every week without a deal, global oil inventories shrink further. The shock absorbers are disappearing. For consumers already squeezed by 3.8% inflation, a summer oil spike would hit gas pumps and grocery shelves hard. This is the geopolitical risk that refuses to fully price in. 3 forces colliding today: Inflation, AI, and war. None of them are resolved. Subscribe for tomorrow's brief. This has been the Financial Brief.